Hi everyone, hope you're all doing well, and today we're going to talk about 10 stocks to buy on the dip. So yesterday was an interesting day on the tech front. A lot of the US tech stocks started pulling back, and because of the little pullback in the stock market, I kind of looked at 10 stocks here and I thought these could be very interesting opportunities if they carry on dipping from where they are at right now. And I'll kind of spend about maybe 1-2 minutes talking about these companies and why I kind of like them, and maybe some prices that I'd be very interested in getting into these companies. Now, funny enough, on the UK front actually opened up yesterday very strong. I was looking at shares of National Express, they were doing very well, Jet2 very well, and also Hollywood Ball had a very good day as well. And all that came from saying that Bojo was pretty much going to let us maybe go outside and see people again for the first time for how many months. So yeah, I think that news kind of helps a lot of the UK stocks. And then it came to the US Open, and the US Open, it was a lot more the tech stocks, and a lot of the tech stocks seem to sell off, and it seems like a lot of these tech stocks are now rotating into different industries. Maybe everyone's kind of looking at tech stocks and saying they've probably been on a good of a run really. And yeah, I mean, we talked about it quite a bit on this channel over the last kind of few weeks really. We've been saying for a long time on this channel, you know, a lot of these tech stocks, they've just been on such a good run, and it just, some of the valuations just kind of don't make sense anymore. Like you're looking and you're thinking, well, even after we get past the CV situation, there's even more growth priced in now from that point. So it's a tricky one from that point of view. It seems like everyone else is kind of in that mindset, and you've seen everyone from a lot of these tech stocks, a few more risky plays, start to rotate into different companies that are more value based, maybe even tourism based. Because you look at something like, I looked at some shares in Disney yesterday, and Disney had a fantastic day. My other position, which is down huge, which is Carnival Cruises, was up as well. So you saw a little bit of rebalancing here, and maybe it was a bit of a wake-up call that if you have a portfolio that is very dependent on tech, you would have noticed the hit on your stock market portfolio yesterday. I mean, don't get me wrong, my portfolio was red yesterday. It had a bit of a down day, but if you had a portfolio that was down, you know, maybe 7-8%, yesterday, then maybe that just suggests, you know, hey, a bit of rebalancing might be a good thing for your portfolio. But with the tech stock selling off, what I always do and what I always say is, you know, don't fear the dip. The dip is always a good buying opportunity, and whenever the market does something, normally I'm doing the opposite. So when tech stocks are going up, I rotate into the other stocks. When the other stocks start going up and tech goes down, I rotate back into tech. And it's always what I do in the stock market is, you know, being fearful when others are greedy, and being greedy when other people are fearful. And that's exactly what went on yesterday, and what I'm already starting to do in my head, and nibbling at a few positions already, but I won't reveal them just yet. But if you do want to know when I'm buying and selling companies, make sure you join my Patreon. The link is in the description. I always post what I'm buying and selling on there. And also, if you want to start buying shares, there's a link to a free trade account. You open up a account through that link, you also get a free share as well, which is pretty good. But we'll get stuck onto these 10 stocks that I am looking to buy on the dip if the price valuations go down a little bit lower. So number one, Tattoo Chef. So this company has started downtrending over the last few months. I mean, the thing is that Tattoo Chef had just been on way too good of a run. So many factors really helped it go up in value, and it was a little bit overpriced. You know, we were getting, you know, $24. I think we got a little bit higher than that point at some point. But, you know, the problem is this company, I said that by the end of this year, this company should be a $30 stock. And now that it was getting to like $24, $25, people were like, but can it go to $40 now? And I was like, no, just because it's been on a good run doesn't mean the upside potential moves up with it, you know. A fair value, it was getting to a bit of a chunky valuation that where it was pretty much at 2022 level in 2021, which it just was too much. And this is definitely a pullback that was needed in Tattoo Chef. Now, saying that, Tattoo Chef, now that it's pulled back down to $21-ish about when I was recording this video, is interesting. I thought I was pretty much done buying Tattoo Chef around about the $17, $18 range, but at $21, there's still a lot of upside from here. Let's not forget, I did say it was I think it'll be a $30 stock by the end of this year, so there's still a lot of upside there. And in the long term, I see this company being a $5 billion to $10 billion company in the next 5 years. So there's still a lot of upside from that point of view. So now Tattoo Chef has had a pullback. Now it's sitting at $21. Very, very interesting to me. We'll see what exactly happens, but it is one that's standing out a little bit to me right now. Funny enough, Tattoo Chef actually also reported preliminary earnings. Earnings were pretty decent. we used to do Tattoo Chef Thursdays. Maybe it's worth bringing a Tattoo Chef Thursday, maybe a Tattoo Chef Wednesday back, and maybe cover them earnings tomorrow. Let me know if you want me to cover the earnings of the news with Tattoo Chef a little bit. Maybe we could do a video on Tattoo Chef. But yeah, earnings kind of snuck out. They all seem pretty good. We got a proper earnings date where we'll get all the financial numbers from this quarter, but pretty happy with them. But maybe people weren't impressed, and that was what also was a cause of the sell-off in Tattoo Chef stock yesterday. Number 2, Beyond Meats. So Beyond Meats has had a bit of a downtrend, as well as we'll stick with the vegan theme for the first 2 stocks, or plant-based theme. With Beyond Meats, it has had a bit of a pullback. From a few weeks ago, there was some positive news that it had announced a deal with Pepsi, and after that deal was announced, and it was a great deal, the stock went up quite a bit, and it probably went up a bit too much in my opinion. And at the time when that deal happened, on that day, I actually sold 10% of my position in Beyond Meat. Now, I always said that if Beyond Meat's got dropped a bit from where it is right now, I would be willing to put that 10% back into Beyond Meat, and it's kind of getting towards them levels now. And this is why even companies that I own and owning for a long time, there's never anything wrong with trimming profit when it's been on too much of a good run, and then if it has a pullback, you could buy it in 20-30% a little bit cheaper. And with Beyond Meat, very, very tempting at the moment. When you think about, I think that earnings wise they're going to have a horrible quarter, but as well as that, I think when you look at some of the deals they've announced, and we're probably about 6 months off getting back to some sort of normality. When you consider the deals that they've signed over the last few months, it's going to be a big kind of Q3, Q4 for Beyond Meat, so that's interesting. Number 3, Amazon. So Amazon's been on a bit of a dip. Well, it's not really a dip, it's kind of been just flatlining pretty much since we had the news that Jeff Bezos was going to step away from the CEO role in Amazon, and Andy Jassy is going to take over that position. Now, Amazon as a company, nothing has changed. You know, it's still a beast mode company. It's still going to be growing 30% revenue growth every year. It's going to be a massive growth company, and the valuation on Amazon is starting to make more and more sense as we go on. And the thing is, if it is the management that are making the investors nervous, I don't think that's a big thing, because you look at what Andy Jassy did do at Amazon when he was in charge of the web service, and that's one of the best growing parts of the company. It's also one of the biggest profit growth parts of the company as well. So everything he's done at the company has been very successful. So I'm sure he's going to step in as the CEO and do a very good job. And let's not forget, Jeff Bezos is still going to be there. He's still going to be on the board. So he's still going to be involved in some of the big decisions there. And yeah, I just think Amazon is just a big blue chip stock that is great for the portfolio. And that's what I'm thinking if I'm going to buy some more shares in it. Number 4, Dropbox. So Dropbox under $20 is very interesting to me. That's where I could see myself maybe buying a little bit more. I don't know what's going on with Dropbox, because it just doesn't seem to do nothing after pulling out earnings that are just better and better every single time. So yeah, I mean, Dropbox brought earnings out, the stock's been just like ugh after earnings, you know, and it's not really done anything. The Dropbox for me is a $40 stock, and that's where it should be. And if it stays at this valuation, I mean, I don't know. It's just crazy to me. Like, it should be a $40 stock. We'll see where it goes in the future. I think that at these sort of prices, it's just done when it announced earnings that were pretty good. It announced a share buyback program that might help it. But I think if Dropbox just stays at this valuation, I've got to say, I just think that another company is going to come in and buy Dropbox out. It just makes sense, you know, the balance sheet, the growth you get with this company, and this sort of valuation, it just makes sense for a big company now to come and buy this company out. So we'll see what happens there. Number 5, Shopify. So Shopify was a company that I wanted to make into a very big position in my portfolio, but before I could do that, the stock started running up and up, and then when I thought it was going to chill out a bit, it came out the ARC as well. They started buying a few more shares as well, and that pumped the stock up a bit more. So with Shopify, I kind of bought a decent position, but I wanted to make it a lot bigger. I just couldn't, because it went on a good run. ARC started buying, and whenever ARC start buying some stocks, you know, it just helps them on the way to go even higher. And yeah, Shopify for me is a company that you look at what they've just done in their earnings report, which actually sent the company down, and I thought it deserved to go up. The revenue growth was something like 80 or 90% on the quarter. Now, analysts are actually forecasting Shopify to go back down to 30% revenue growth in 2021. And I'm like, that's got to be wrong. Like, this company is going to grow at an absolute crazy rate going forward. I think it might even be below 30% what they're actually forecasting Shopify to grow. And I'm like, Shopify are going to benefit so much from the CV. You know, they've got new sellers using their platform, and their sales are only going to grow and grow, and people realizing the benefits of having an online shop. And in my opinion, Shopify is the best way to get online and set up a shop, and for you to manage it, get all the analytics and the other things they have in place to help you grow as a company. Absolutely fantastic. So we'll see what happens with Shopify. If it can go maybe to the $1,000 mark, that maybe even 1,100. That would be really interesting. Number 6 is Gnog, Golden Nugget. So this would complete my set really of having online gambling platforms. I mean, I've got DraftKings, I've got Gang. Gnog's the one that's kind of missing out of this portfolio, and it's one that it's not I don't like this one as much as DraftKings. I don't like it as much as Gang. So it would never be a bigger position than them two. But what I am looking at Gnog now, I think it's sitting down around about a 1 billion valuation. And it's a company that I think grew revenue at a very high percentage on the last earnings report. They released it a little bit early. I can't remember the exact numbers, but I believe it was like a 60% revenue growth. And I'm looking at this company thinking, that's just from New Jersey. They've got a good market share in New Jersey. They're looking to move into Michigan now. If they move into Michigan this year, that's only going to help the revenue grow even more. And then also they'll look to move into more states past New Jersey and Michigan. And I'm thinking, we know what the online growth is. I'm looking, it's a 1 billion company that's going to put in about 100 million revenue. So it's a very cheap valuation. You've got amazing growth on it. And sure, I mean, I don't like it as much as Gang. I don't like it as much as DraftKings. But there's a point where I go, what you look at this company and you look at the growth side of it, and it's also pretty much profitable, and you look at the expansion plans, you know, you can see this easily going up in value. The one thing why I still have not bought this company is the management that just makes me so nervous on this company. You know, we know that the management put loads of debt on this company to save the rest of the Golden Nugget empire, and also as well as putting the debt on this company as well, we kind of know that it hasn't gone public because to benefit, you know, shareholders, investors. It was just taken public to raise cash to pay off some of the debt that was put on this company. And I just don't like how management have treated it. You know, it's just kind of like a side project to them. You know, they put it public to put debt on it. They then put it public as a SPAC to then get some cash to pay off the debt on it. The way of getting around to saving the rest of the empire that they have here. And yeah, that's the thing I don't like about it. It's just not a priority to management, and sometimes the management can make or break an investment, and that's what makes me nervous and why I just haven't got on across the line. But like I say previously, you know, there's a point where you look at Golden Nugget and you're like, the growth, the valuation, so what if the management isn't, you know, it's still going to have amazing growth. You know, maybe the management have made bad decisions, but there's a point where you're like, this is just way too cheap. So it's what I'm considering. I mean, I always said below $13 would be interesting, even 14, so we're getting close to it, so we'll see what happens. Next up is Yala. So this actually came from a Discord member, which is Ash. Ash actually said this one a while ago, and I was like, oh, it's actually really interesting, I might buy it, and then the stock just went on a crazy run. Now the stock has had a bit of a pullback right now, and I'm looking and thinking this is quite an interesting play, because Yala's a bit of a voice messaging service that's focused in China and also the Middle East, and it's very popular. Like, the user growth on this platform is absolutely huge, and as well as the user growth being very popular on this platform, it also has a pretty decent balance sheet. It also has a very good revenue and profit growth. Now the only little thing that I have with this is that it's still, I think it's still a little bit highly valued. That's the only problem I do have with this platform. So it's one that I'm going to look maybe a bit further into, but what I do really like about this company is the profit growth, the revenue growth on the balance sheet, and I also really like this industry. I think it's a good mixture. It's one that I'm keeping an eye on very close, because like I say, I was going to maybe consider buying it a few months ago, went on a crazy run, and now I'm getting a bit of a pullback on it, so I'll see what happens on that one. Number 8, Callaway. So Callaway is actually very close to me maybe buying. I actually ideally want to get this around about the $25 mark, and it's not too far off there. If Callaway was to drop only probably about 5% more from here, Callaway would be a stock that I should have bought a bit heavier at the time. It's a company that I really like because I like how they're buying Topgolf. I think Topgolf is going to be a great acquisition for Callaway in the next few years. And Callaway for me is a stock that will be probably above $60 in the next few years when it starts doing all the Topgolf acquisition. Now, for me, if Callaway does go to that, that's a position which I would probably look to, well, I would at least double it straight away, maybe even triple it, maybe go even higher than that. So we'll see what happens. Callaway for me is a position that I really do like, and I was always gutted that it went up before I could buy even more of it. Number 9, Adobe. So this is a tech stock that I really like. It's a subscription-based service. Their editing programs are by far the best around and are pretty much untouchable. Like, there's no platforms that I can see ever getting anywhere close to these programs. They're absolutely amazing to use. I use Premiere for editing my videos, and it's great. I could not use any other program going forward now for my editing. I also started using Photoshop for my thumbnails. Don't know if you've seen the difference recently, but over the last kind of week, they are, well, in my opinion, I hope so, they are starting to look a little bit better, and it's all through Adobe. The programs are amazing, subscription based. I think the fees are pretty good for the programs that you do get, and yeah, it's a company that has very good growth still. It's come down from about a $500 plus stock down to about 470ish right now, and maybe if this gets down to even like 430, I could consider buying a little position in this one because I do really like the company. Very strong brand. Number 10, Tesla. So I'm looking at Tesla right now, and it is still got a lot of growth priced into it, but at the same time I'm looking and thinking it is a very good dip. How much lower is it realistically going to go? And it is a great company that is from, you know, whatever valuation Tesla's at, you can look at Tesla and go, there's so much going for in this company, you know, the car side of it, the solar side of it, and even things further down the line. Like this company, you know, in 5 years, Tesla is going to be higher on the share price than what it is right now. And that's the thing that I'm trying to think about. At the same time, I'm also really cautious because I know, like, sure, it might be higher, but how much higher is it going to be? Is it going to be higher by 100%, 200%, 300%? You know, the days of it going up, you know, 10x are gone now, unfortunately. But I'm looking and thinking, it's a company for the future that will do very well, and at the moment I have no part of it, and it is on a drop, and I am considering it. I just still struggle to get my head around the valuation side of it because it has got so many years of growth already priced in. But at the same time, you know, while it's on a little bit drop, maybe just have a little bit of a small position in there so I am covered in that space maybe. I don't know. It's something that I am considering about, and we'll see where it goes from here. Now, there's actually 11 stocks, and the 11th stock is AMD. I said 10 just because it looks better on the title and the thumbnail and the algorithm. So I'm sure you don't mind me putting we won't call it 11th stock, we'll call it a bonus stock, which is AMD. Now, this company has always been at a crazy valuation where I've not been able to get into it. But at the moment it is dropping back a little bit. It has had a very strong year. The valuation does seem pretty good on it. I'll be honest though, I need to do more research on this one for me to go any further on it. But I am looking at this company now and thinking, it's not actually, when you look at it, too bad of a valuation. So it could be something that I do think about in the next coming few days. I need to do a proper deep dive on the company, but it's one that is interesting me at the moment because I've got no play in the AMD space of the semiconductor space. You know, it's normally an area that I don't touch, but I know how great of a company AMD is and how much of the market share they're currently taking, which is great. So those are the 10 stocks I'm looking to buy on the dip. So I kind of give you some price targets where I'm looking to buy some of them. We'll see what happens. We'll see what today brings in the stock market as well. Maybe it takes a few of them just a little lower where they do come interesting. But yeah, 10 stocks and a bonus stock of AMD. Hope you enjoyed it. Let me know what you're considering buying as well. I'm always interested from hearing from you guys, so let me know in the comment section. But I hope you enjoyed this video. Remember, if there is a dip, don't panic. That's always the great time to buy. Look at what happened in March. If you were buying in that dip, how well you're doing right now. Dips are always good things, not bad things. That's always the key thing to remember. But I hope you enjoyed it. If you are new, make sure you subscribe, and I'll see you next video.